Hey everyone, Couch Investor back to our video for today. So let's discuss Nvidia's earnings report. Let's also pay our respect to the ones shorting this company. The stock is up around 14-15% or so after hours. It's pretty crazy what has been happening with this stock since the last couple of months. Now they did beat on earnings per share estimates, they did beat on revenue estimates as well, and they hugely beat on Q2 revenue estimates for the guidance. Estimation was $7.2 billion. Their Q2 outlook for revenue is $11 billion, the plus minus 2% as always. It's just incredible, incredible. Also going to discuss two announcements they made yesterday, one with Dell, the other one with Microsoft. That will be at the end of this video. All right, so now let's jump into the numbers. So first up, a major overview here. You can see revenue for Q1 up 19% quarter over quarter, but still down 13% year over year. Gross margin overall basically flat. Operating expenses down 1% quarter over quarter, but up 9% year over year. Operating income, big improvements here already quarter over quarter, up 37%. Year over year, down 23%. Net income, $2.71 billion. That's up 25% quarter over quarter, down 21%. And this is non-GAAP, by the way. And then diluted earnings per share, $1.09, up 24% quarter over quarter, down 20%. Of course, we all know what happened last year. Then when you look at revenue per reportable segment, so compute and networking, no surprise there, $4.46 billion, up 21% quarter over quarter, and also up 21% year over year. Now when we look at graphics, although it's up 15% quarter over quarter, it's still down 41% year over year. But as you will see, it is recovering quite nicely. And so now we have a data center at $4.28 billion, record quarter again, up 18% quarter over quarter, 14% year over year. As for gaming, it is still down 38% year over year, but it's up 22% quarter over quarter. Second quarter in a row that we are improving in the gaming segment, which is something that has dragged down revenue for the business last year. Professional visualization, it's up 31% quarter over quarter, but still down heavily year over year. Automotive up tremendously. We've talked about that in the past. It's up 114% year over year, up just 1% quarter over quarter. So we're seeing a slowdown in that segment. I'll show you in just a second how these numbers compare to the last couple of quarters in the last couple of years, actually. So you can see that auto has actually quite increased since Q4 fiscal year 2022 from 125 million to now close to 300 million. When you look at gaming, the same quarter Q4 fiscal year 2022, $3.42 billion. Then it decreased, went down all the way to Q3 fiscal year 2023 to just 1.57 billion. Now we're back over the $2.2 billion, so it's nice to see that. Data center just continues to execute like crazy. As I said in the past, a long time ago, I said it will be a no-brainer. Data center will be the biggest segment for this company. If you enjoyed this video so far, we really appreciate it if you hit that thumbs up button and subscribe if you have not. We're trying to reach 30,000 subscribers by the end of the year. Thank you very much. And if you want to support me even further, do check out the link down in the description and the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, if we look at cash flow and cash from operating activities, that was $2.91 billion, up from $1.73 billion a year ago and $2.25 billion a quarter ago. Now, the year-over-year increase reflects lower inventory prepayments and changes in inventory, partially offset by low revenue. The sequential increase was driven by higher revenue. And so free cash flow was $2.64 billion compared with $1.35 billion a year ago and $1.74 billion a quarter ago. So almost $1 billion extra in free cash flow for this quarter. Of course, they're also paying out a tiny dividend. What's about 4 cents or so. So not that much, but for those of you that are getting those payouts, congratulations. And now as for the second quarter, and this just blew my mind. I thought this was a typo at first. So revenue is expected to be $11 billion. I mean, the company, if you look at this chart here again, they peaked at $8.28 billion. And now they're telling us we're going to go from $1.19 billion in Q1 to $11 billion in Q2. That's a huge jump. And to be honest, there is no explanation. There's no explanation given here to justify this number. Of course, they'll mention something in the earnings call. Of course, analysts will ask about it, and I'll of course pin it in the pinned comment. Now, as for the announcements they made yesterday, so Dell Technologies and Nvidia introduced Project Helix for secure on-prem generative AI. Basically, Project Helix makes it easy for enterprises to build and deploy trustworthy generative AI. Dell and Nvidia infrastructure and software include built-in data security for on-prem generative AI application. They say here Project Helix gives enterprises purpose-built AI models to more quickly and securely gain value from the immense amounts of data under use today, basically making it much easier for enterprises to get on the hype train, get on the trend, get up to date with everything that's going to happen. It's happening right now with regards to generative AI. And then number 2 was Nvidia collaborates with Microsoft to accelerate enterprise-ready generative AI. I think this is a bit similar to Amazon Bedrock, if I'm not mistaken. So Nvidia AI enterprise integration with Azure Machine Learning provides end-to-end cloud platform for developers to build, deploy, and manage AI applications for large language models. They continue by saying here, with the coming wave of generative AI applications, enterprises are seeking secure, accelerated tools and services that drive innovation. The combination of Nvidia AI enterprise software and Azure Machine Learning will help enterprises speed up their AI initiatives with a straight, efficient path from development to production. So to conclude, and I just checked the price action after hours, of course, as always, after the earnings call, price can change. When the market opens, price can change again, but currently it's up 18%. Now, of course, the demand for their products, especially when it relates to data center, because of the rise of artificial intelligence, generative AI, etc., is definitely helping a business like Nvidia. And it's definitely one of the reasons why guidance for Q2 is way higher than what the market was expecting. But even that, I think there is a huge disconnect here. I would love to know what it is. I will again write it down in a pinned comment after I listen to the earnings call. All in all, I'm not changing my opinion on Nvidia. It's still one of the 4 companies I own in my second portfolio. But although it's an incredible company, it is very expensive. I think everybody can agree with that. I think it's very expensive. I'm not saying you should short it. I think shorting is just bad karma, but all in all, very good company. Valuation currently just doesn't make any sense. Of course, for the long term, this will become one of the biggest and best companies around. But all in all, great quarter, even better guidance. Again, great execution by Nvidia. That's exactly what you would expect from this company and this management, and especially at this current price. Will be interesting to see what the analyst will say tomorrow and the next coming days with new price targets, etc. I'll keep you all up to date. That's about it for me for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.